since doing a lot of mindset and personal development and just growing in general, maybe becoming more mature, now I'm going to be 38 next month. I now see competition as my biggest strength. And the way I use it now is I go, okay, Aaron, you're working on this deal. How can I help you win? Because when you win, I'm part of that team now. So I get to say I win.
Welcome back to the show, Disruptors. I'm your host, Aaron Hale, and this is Point of Impact. Today's guest, Veena Jetti, besides being a philanthropist, educator, member of the Forbes Business Council, and a whole bunch of other hats she wears, she's also the highly accomplished founder of Vive Funds, a real estate investment firm with over $1 billion in assets under management, including a $135 million deal, which became the largest female-led multifamily acquisition in history. Today, we're going to discuss how she got into real estate and why she decided on multifamily. And also, why she believes specializing in a specific asset class is important. We also talk about where she and Vive are investing in the U.S., what she sees for the market today. Veena and I also discuss team building, personality tests, and culture indexes, developing professional growth through personal development, and developing trust among your investors and your team through proper communication and following through on your promises. I really enjoyed this conversation. I'm absolutely sure you're going to also. It's easy to understand how Veena Jetti became so successful, and she's going to continue to do so in the future. If you haven't subscribed to the show yet, do so now. Give it 5 stars and leave a review while you're at it. And please share it with somebody else. For that, I'll say my thanks with some virtual X's and O's. Well, without further ado and all the warm fuzzies sent, my conversation with Veena Jetti. Veena, welcome to Point of Impact.
Hi, thank you for having me. I'm so excited.
I am too. I've heard you on a number of other podcasts, and just I'm so blown away by not just your presence on other shows, but all the incredible work you're doing with. And now, forgive me because I use text to speech, and it sometimes mispronounces things. But Vive or Vive
Yes,
Funds.
you got it right the first time. Vive Funds.
Vive. Sorry, I didn't even hear that.
Yep, Vive Funds.
Vive Funds. And this is incredible what you've done since the founding of this. And tell me, now you're over $1 billion in assets held.
Yeah.
And I want to get into all of it. First, what drew you to real estate in the first place?
Yeah, so I actually come from a real estate family. My mom is a really successful single family investor. So she never bought multifamily. I was the first in my family to buy multifamily assets because I wanted the scale of commercial, but I loved the residential side. I love the idea of revitalizing and investing into communities where people like my family, like I've lived in apartments before. And so I just really loved that story. One point of clarification: I've bought and sold over $1 billion in my own portfolio. As of today, I probably have about a little over 530 million roughly, because I sold 7 deals back in 2022. So I sold a lot of my portfolio back then, and I'm under contract now to buy more. So I'm adding more, but as of right now, it's not $1 billion.
In your personal portfolio, do you also hold almost, I don't know, strictly apartment buildings, residential multifamily?
Yeah, so in my personal portfolio, the vast majority of our trust is invested into multifamily assets. Actually, we're the largest investors in our own deals usually. So we invest into our own deals on the LP side, right alongside of our investors. But I also, I have everything in my portfolio. I have assisted living, I have retail, I have restaurant, we just bought a bank, I have single family, I have an Airbnb now. So I have Bitcoin, I have all the things in my personal portfolio.
Do you manage your own Airbnb at the same time?
No, gosh, no, 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 no. So that's actually a funny story. I bought it from somebody that was in my community.
Hmm.
I bought it from them. They said, "Hey, we have this really great sub two deal. It's in Orlando. It's a four-bedroom home that would make a really great Airbnb." And they were like, "Do you want to buy it? I'll assign it to you for like $5,000." And I was like, "Okay." So we bought it. We put like 30,000 or $35,000 down, probably another like six or seven into just getting it furnished and everything up to date to where it needed to be. And that interest rate on that deal is like 3.5%. So really great interest rate. I have that fixed for 30 years. And I ended up buying it with my securities attorney. We just went in, we bought it, and it's cash flowed really well. So we bought this in October of last year. And
Hmm.
in the first 6 months, we probably did about 9,000 in net profit. So, and that's after paying somebody 20% to manage it for us
Hmm.
because I'm not going to deal with just one unit. That's too small for me and it's not interesting. But yeah, we make about like 12, 1,300 bucks a month in net profit. And then, it's a really great tax play, which is probably the bigger win on it. And whenever we go to Orlando, we can always just use it for our family or whatever we want, but it's a great interest rate.
The cash flow on short-term rentals is incredible, and we have a few ourselves. Uh,
Hmm.
but you're not gonna grow that equity, or you're not gonna
Yeah.
grow the kind of wealth that you've amassed with single family houses. And but one thing I'm very curious about, I've heard this from other brokers, other investors, that uh, the commercial multifamily side, the apartment buildings, all the like right now, all the juice has been squeezed. There was
Mm,
a mad rush into apartment buildings, and the interest rates went up, cap rates were compressed, but everything's been renovated, and I don't want to say everything, but your fund invests in Class B,
mhm.
value add, stabilized. But what are you seeing right now? Is it difficult to find decent investments to get the kind of returns you're looking to get for your investors?
Yes, it's definitely really difficult right now because one, to your point, there are a lot of what I like to call real estate tourists that came into the real estate market in the last several years when we were in one of the greatest bull runs we've ever been in. And as a result of that, we had a lot of inexperienced investors that were overpaying and bidding up assets or maybe not underwriting properly, which caused a lot of chaos in the market, if you will. And yes, interest rates have gone up, cap rates have expanded. I think they will compress again eventually, but not right this moment, maybe in a year, 2 years as the Fed starts cutting rates. But I think the more important thing to note is we are definitely not seeing as much deal flow as we used to. This year, I actually just went under contract last week on my very first deal for all of 2024. And we're recording this now at the end of July. So I waited more than half the year without doing a single deal because I would rather do a great deal than do an okay deal or a bad deal. It's just not worth the reputational hit. It's not worth losing the trust we built with our investors. And so for me, I wanted to wait till we had a great deal. Now we have a great deal. And what makes this deal specifically great is when you can assume debt. So the last deal we did, even last year, we did one deal all year. We bought the largest all woman owned transaction in the entire country. It was $131.5 million. dollars. And on that deal, we were able to assume the debt. Being able to assume fixed rate debt right now is a golden ticket. We have 12 years left on the note, 7 years interest only, and the interest rate on that deal was 2.77%. So there are a lot of really phenomenal deals out there, and you have to be willing to pay a little bit of a premium for it. But if you can pay more because the debt is so significantly lower and stabilized, it actually will generate asymmetrical returns for your investors if underwritten properly.
What about the stabilized versus value add? How 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 do you find a stabilized asset while also adding value? Is it in the debt?
So I look at it in a couple of different ways. One is absolutely the debt. If you can buy with debt that's fixed below your ingoing cap rate, you're going to have some amount of upside potential on it. From the value add perspective specifically, though, we look at two major ways to add value to the asset or force appreciation on the asset. Number one is through income growth, right? Going in, renovating the interiors, the exteriors, charging a higher premium, bringing it to market. That's one way. That's kind of a traditional way we've seen done historically. The second way is probably the way that most people don't look at deals, but we definitely do, is around management efficiencies. So, a lot of times, especially in today's market, you'll have sellers that bought the asset years ago and are just not hands on with it. They're not bringing it up to market. For example, maybe they haven't put in tech packages, and your demographic in that area can charge another $50 or $75 for a tech package. Every dollar of NOI you add to your T12 at a 5 cap is adding $20 of value. So if you can just multiply that, even adding $5 per unit per month is significant when we're talking about 5% ish, give or take a percent cap rates. That's a very significant value add on a deal. So looking for the money in multiple areas is one, helpful, but two, also recognizing that forcing appreciation through renovations and rent premiums is definitely the harder of the two to execute on now. It's not impossible. You definitely should still try to do it. But we've seen national rent growth softening, and inflation is still at an all time high.
That's one of my favorite parts about, the uh, argument between residential and commercial is how many levers you really do
Yeah.
have at your advantage with commercial real estate uh, to affect the value on a property. And so, uh, when it comes to pulling some of these levers, what about how you're attracting investors? You've done some pretty uh, large capital raise
Yeah.
events. So how do you attract uh, investors? And
So,
oh, so go ahead.
oh, sorry, go ahead. I did not mean to cut you off.
Well, one of the things was that how do you attract investors, and how do you keep them coming back to for more investments?
Okay, so there's a few things. Here is my secret sauce. This is, I know people are going to be like, oh, that's your secret sauce, but it really is true. I've raised just over $375 million to date. I am working on another capital raise right now, which will take us over the $400 million mark. So these are tried and true across many, many, many iterations and many, many different investments with many different investors. And what I would say is number one, this is a relationship game. There's nothing more complex about it. I know everyone wants some kind of like creative spreadsheet or something that's going to magically convince an investor to invest with you. It's not. This is a relationship game. You have to build your relationships with your investors before you have a deal available. If you wait until you have a deal, you are going to be too late. It will take you way too long to establish the trust that you need in order to raise that capital. So that's number one. Number two, do what you say you're going to do all the time. If I tell an investor, I will send you an update by Friday, guess what happens on Friday? There is an update going out. And if for whatever reason, let's say I have to wait on a third party to give me information to get that update to Susie Smith, I'm going to reach out on Friday and say, hey, Susie, I just want you to know I am actively working on the request. I've already done A, B, and C. I'm waiting on DEF, and the new deadline for me to get this to you looks like it'll be Tuesday next week. And always give yourself a little bit of wiggle room because things always end up going wrong. But when you do that, you build trust. You're building trust with your investor that, okay, I didn't get the thing I was hoping for or expecting, but I got communication about what happened and why it happened. Investors will put up with what you ask them if you explain why you're asking them to do this. And so if there's a what, there has to always be a why. And so that's the second thing. And then the third thing I will say, and this is the thing I see most investors make a mistake on, it is not using a proper securities attorney. So we work with Nick McGrew of Polymath Legal out of Los Angeles. I've been working with him for like 15 years now. I've had a very long standing relationship with him. He has done our documents on more deals than I can even count. Working with him is a lot of credibility in and of itself because he's very selective. He isn't going to work with just any Tom, Dick, and Harry that shows up and pays him money. He's only working with legitimate operators, legitimate sponsors, as far as he can tell, right? So, working with a legitimate securities attorney adds a lot of credibility for your investors to say, hey, not only do we know what we're doing, we hire the best, we work with the best, they want to work with us, they continue working with us. And being able to have that kind of confidence from a securities attorney is really helpful when you're dealing with investors because they need to be protected, right? You're dealing with their money and this is their hard-earned capital. So you have to protect your investors. Those documents not only protect them, they also protect you as a sponsor. And as far as how to get them to keep returning, it's really all about the investor experience. I had a deal that I exited. I was working on it. I had partners on the deal that I'm no longer partnered with today. And our JV partner on that deal, his investors were not happy with his level of communication and started reaching out to me. And, out of respect for my partner, I was like, hey, it's kind of a little bit of a gray area. If I'm the one communicating with you, you really need to go to my JV partner who is your contact. And the response back was, no, I don't want to work with them anymore because they don't communicate with me. I don't mind that things didn't go the way they had told me, which wasn't even, I mean, we made money on that deal. We delivered a double-digit return. So it actually went well for all intents and purposes, but they weren't getting the level of communication that they wanted or expected or were told. And so what happens is, despite the project doing well and then making money, they weren't being communicated or they didn't feel taken care of. They just felt like another number. And so that relationship got totally tarnished for no reason. There was no reason for that to happen. And that investor said, I'm no longer working with name of X partner. And he said, I want to know what deals you're leading and you're doing because your communication with me has been top notch. So when I say it's really about the relationship, it really is. Treat people the way you want to be treated. It's so simple.
Wow, there's so much there. I'm just going to unplug my microphone so I don't interrupt anymore. Keep going. Uh,
Oh,
but
no, you're good. You're good.
no, you're absolutely right about the relationship thing, and so much of business, especially I don't know, especially, but definitely, it's definitely true in real estate, is about relationships and communication. It like you said, if you say you're gonna give an update on Friday, when Friday comes, even if you have no changes, today's update is there is no
No
update,
changes.
but here I
Yep.
am.
Yep.
But also, when you're talking about an attorney, like an SEC attorney, I tell you what, finding the right representation, that's an investment in its own right. And that's not where you want to start, budgeting, and finding the best deal on legal, getting an
Correct.
attorney. So you're absolutely right. And with that's a partnership in itself. And finding the right attorney, yeah, like you said, it brings credibility as well as, of course, that the level of safety and reliability. So when it comes to capital raising, do you have a particular philosophy there, or do you, when you have the deal, does the deal, um, do you try to match the right deal with the right investors, or how do you manage the relationships there?
Yeah, so when we first started, I had like 25 and potential investors in my database. Today, we actually don't even have that many today. It's probably close to like 4,000 or 5,000. It's not that many comparative to how much money we're raising. Last year, that one deal that we did, we had to raise 66, 67 million dollars. So, and that was in 8 weeks. So we have to have a pretty wide net. So I'd say even for 5,000, we have a lot of really excited investors who are loyal to us, who really understand the relationship that we have. And each of those relationships has been built brick by brick by brick. There is not a shortcut when it comes to building the relationship. You have to do it genuinely. People will sense if you are being disingenuous. People are not stupid. You are not smarter than them. You know, a lot of people will be like, oh, well, I'm smarter. I could do blah, 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 blah. I'm like, don't do that. It's going to come off disingenuous. And when they find out, people are going to feel like you are getting one over on them, or you're doing something that's like not very trustworthy or transparent. People aren't going to invest with you like that. They want to invest with people they know, like, and trust. So tell them who you are so they know you. Explain how you show up with the same character and morals, right? Character and integrity is what you do when nobody's looking, not what happens when you're on a stage and everyone can see. It's what do you do when no one's looking, right? Like, um, if you find someone's wallet on the ground, do you pick it up and do you look through it and take the money out? Or do you take it and go through it to figure out who it belongs to and try to contact the owner, right? Like they're same scenario, nobody's watching, but it's how you show up. So if you're the latter, right, then I can say, okay, you do this when no one's watching. I can only imagine what you're going to do when everyone's watching, right? You're going to show up the same. But if you're willing to change who you are when there's no spotlight, there's no accountability, that's a big problem because this requires a lot of trust. And in order for you to build that trust, you have to be a person of integrity. It's just that simple. And quite frankly, as someone in this space and as an investor myself, I would rather that bad operators, people who are not trustworthy, get weeded out and can't do deals because it makes it worse for the rest of us that are operating really good businesses with really great relationships.
Totally agree with that. In fact, when I'm investing with borrowed money, especially when it comes to the relationships I built along the way, I like to call it grandma's money. You know, I want to treat that better than I would treat my own.
Absolutely.
Yeah, that's like the prime directive. The capital, rule is, protect investor capital.
At all costs.
So, how do you structure these deals? And I think, like before, how do you keep them coming back? Is there particular incentives? Do you structure it any differently than other funds?
So we don't necessarily have particular incentives for investors that come back and repeat invest with us, but I will say about 80% of our investors on any of our deals are in two or more deals with us. So our investors are always coming back to us and re-upping with us. I do suspect that this year we're going to see a little bit of a change, mainly because we are going to see a little bit more scared capital, right? Retail capital is getting a little more nervous, but smart capital, institutional capital is moving very significantly, very heavily into the market. So our more sophisticated investors are going to start putting more money into these deals. So I think we're going to see a little bit of a change in dynamic. But what I will say is, again, goes back to the communication and the relationship. I have had investors who have come to me and said, I don't even care what the deal is. I just want to be invested with you because I know that you are going to take care of me regardless of what happens in the market. And that's the biggest risk I have is a bad operator or someone who isn't going to take care of us or who isn't going to do everything that they can do to make these investments successful. And so, it's you're betting on the jockey, you're not betting on the horse. And so really building those relationships, making sure you have touch points, you communicate with your investors. Like I text all of my investors often. And I take every opportunity to deliver news to them as quickly as possible. So deliver good news fast and deliver bad news faster. It's the best way to go about it. Trust me, I've been there, done that, got the t-shirt. The best way to do it is deliver bad news as quickly as possible to your investors because it will build trust, which you will need a lot of as you're navigating through a rocky time or through uncertainty or instability.
Ooh, I'm gonna put that quote in my back pocket. I love that. Okay, so I was reading uh, your Forbes recent Forbes article. Talking about the difference or the relationship between personal well-being and professional growth. And there's you have a philosophy there, and it's not just about that grind set, right? The
Mhm.
quit whining and work more. Yeah, work harder. Can you tell me a little bit more about how you look at personal development?
Yeah, so I do a lot in the personal development side for myself because what I realized just a couple years ago is it, I can never outperform my own personal development because my mind cannot imagine being somebody who does A, B, or C if I'm not working on my mindset. So I have to be able to personally develop because I have to grow into the Veena that can do $10 billion dollars in deals, right? Like the Veena that did $10 million dollars in deals is not the same person that did $1 billion in deals. What got me there won't get me here, right? So what gets you there isn't going to get you to that next level. It's a different set of tools. And with that, once you realize that, once you unlock that, this is absolutely the holy grail of things that you can discover early on in your journey. And I wish I did not because, well, I'm a big dummy and I just totally ignored all the people smarter than me that said that. And I'm sure there are people that are going to hear this and ignore me saying this, even though I've been there and done that. Um, but here's what it really is. Every week, at least twice a week, if not more, I coach with my mindset coach. Her name's Rosie Noel. She's incredible. And we do a lot of Clifton Strengths Assessment work. So the Clifton Strengths Assessment is a assessment that was put together by Gallup. They're a multi-billion dollar research company. You probably heard of them. And what they did was they said, in the world, everybody's personality is comprised of 34 main themes. And those 34 themes vary, but everybody generally is made up of these 34. They've identified 34 distinct themes that show up. And then they said, all of those 34 themes belong in 4 domains. So there's orange, which is the influencing domain, meaning that they're very external relationship building. They like to influence situations to work toward bigger goals. That I lead with orange, so I am orange. Then you have executing, which is purple, and that is the people who just get it done. They keep the to-do list. They can be high discipline, responsibility, like all of those are themes that come up in purple. Then you have blue, which is relationship building. So that's those people that want to build like really deep, meaningful relationships, and green, which is strategic thinking. Now, you have some combination of these, whether it's 1, 2, 3, or 4. I don't know until you take the assessment. But what Rosie does is she will take your assessment and then she will help you turn your strengths into superpowers. For example, my number one strength is competition. And when I was 20, my competition would show up so negatively. It would show up because it's always on, it's always there, it's what I lead with, it's just who I am. And so, what that would look like is I would be competitive with my friends and my peers and my family and everybody around me. And it would be either I win or I lose. Since doing a lot of mindset and personal development and just growing in general, maybe becoming more mature, now I'm going to be 38 next month. Um, since that, I now see competition as my biggest strength, and the way I use it now is I go, okay, Aaron, you're working on this deal. How can I help you win? Because when you win, I'm part of that team now. So I get to say I win. So it still feeds my desire to compete and win. But now I'm not competing against you. I'm competing with you. And that's also part of just switching into the abundance mindset too. And so I do a lot of work around that, because I think in order for me to not just show up as a better business owner for my investors, for our lenders, for all of our partners, I also show up as a better wife and a better mother to my children. And it's a holistic development, right? I'm not only developing the business side of my brain, it's me as a person. And that's how I show up everywhere. That's, like I said, the mark of integrity is how you show up. I show up the same way, whether you put me on a stage or a podcast, or I'm in the living room with my family, or I'm by myself. It doesn't matter. I show up the same every single time, because I'm so true to my own core. So, and if you haven't taken the Clifton Strengths Assessment, highly recommend it. It is the best one out there. It's better than DISC and all the what is it, Myers-Briggs or whatever, all of those. It's way better. You can go to Rosie Noel, ROSIENOEL.com, and you can get the assessment through her link. And it takes like 20 minutes to do, and it is awesome. It is so comprehensive. It was like the best $70 I spent in my life.
I just took, what was it, the Colby test.
I don't think I know the Colby one.
Yeah, it was recommended to me. I recently had an interview with Justin Brain of the Epic Fit Mastermind, and as it turns out, I do have ADHD.
Many
But
people do.
but what I what always challenges me is not how to best utilize my own strengths. And I'm wondering if this is true for you. It's about utilizing my own strengths, or at least understanding someone else's strengths
Yep.
to, use my own character to help them in their strengths. Sometimes it takes a mindset shift just to be able to speak to somebody in the right tone, the right language. As- So how do you use this test uh, to be a better leader?
Oh gosh. Okay. So anytime someone onboards with me, the first thing they do is they take the test if they haven't taken it already. So the nice thing about Clifton Strengths is after the age of 19, you don't have to take it again. You just take it one time and it doesn't really change. The only time Gallup actually recommends retaking it is if you've had like a major life event, like some kind of a trauma, or it could be a good event too, right? Or if there's something that like really fundamentally changed, then you might retake it because maybe your strengths have moved or shifted a little bit. But regardless, you really only have to take it the one time for most people after the age of 19. What I do is they all on board with it. And then I have Rosie actually do a group coaching session with me. So what she does is she'll take all of our team's individual portfolios, and then she'll overlay them on each other and make this amalgam of what our whole team looks like. It makes it really easy to spot the strengths of the team and where we should lean in. And it also makes it really easy to spot the gaps or the lesser themes. She doesn't like to use the word weaknesses. And so we can see where there are holes, and we can either specifically hire for it, or we create strategies around it using our strengths to overcome the things that are lesser themes for us. And I had her do this with my husband and I. So we overlaid our domains over each other. So I could see, do we show up together in this way or that way? And what we found was my husband, surprise, surprise, he's like the yin to my yang. We are complete opposites, but we totally balance each other out. And it's really easy to see, like, my high competition, he's high harmony. That's his strength. I think it's his number one. And harmony wants to like keep the peace. And so that means a lot of times he lets me win because I have to win to feel good about myself. But he feels great about it too because he's keeping harmony. And that's the thing, that's he doesn't care about competing with me. And so just being able to understand those things and leverage them. And so to take a step further, what I did was I had an employee, she was causing a lot of heartache and headache for me. And it wasn't because she wasn't kind or nice or a good person. She was great. She had a lot of really good potential in her. But for whatever reason, I could not lead her the way I had every other person in my company. So I took her profile, I called Rosie up and I said, Rosie, I'm having an issue with so and so. What is going wrong? And so she takes the report, she looks at it, she goes, okay, tell me more about the situation. So I told her, I said, look, I'm having trouble getting her to execute on really basic things. And she's a project manager. So this is really tough for me because I need a project manager that can execute. Otherwise, it's not really that useful. And she said, okay, she leads with purple, which means she's an executing theme. So she should be able to do this, but she has a lot of orange, which means she cares a lot about the influence that she has on projects and people. And she wants to make a big impact. And I said, okay, I understand. So Rosie gave me very practical tips, right? She said, okay, you should change her job function to this and made it a little bit more impact oriented. She also gave me a different way to compensate her and basically give her different motivation than what I was normally doing. And then changing just like the responsibilities of how she showed up. And I was like, okay, amazing. So when I tried it, it absolutely worked like a charm because Rosie could see what she was naturally going to be good at. And so being able to see that and understand that early on really minimizes your turnover. It amplifies the strength of your team and it just creates a better, more positive, fulfilling work environment for the people that are working for you.
It sounds like somebody who would be incentivized by performance-based uh,
Yes.
income. Like, yeah.
Yep.
So,
And it's not just that. She actually was also because she was high significance too.
mhm.
And so, really, what she needed was praise. She needed me to praise her more often in public settings. And so I started, sending in the Slack channel like, hey, so and so did an awesome job today because of X, Y, and Z. So it was just allowed me to be more mindful as a leader of how I can make her feel fulfilled.
Mhm. I was as you were describing that, I was also imagining just how my wife and I communicate and how I have to try to uh, stop myself from just blurting out the first thing that comes to my mind. But
Oh,
my wife, she's always the optimist and loves seeing the bottom line. Everybody likes the big number, right?
yeah.
Or the top line, really.
Yeah.
So she'll say, or a couple units over on this street, just brought in $17,000 or something this month, and that's like the highest it's ever brought in. I, that's great, but after the expenses, how much? This
Is left.
that's
Yeah.
not. What's the bottom line? Like, I'm more of the pragmatist, but I got to stop and it's like I got to remember that this is this is fantastic news because that means that not only are we made good investments, but they're being operated great. So I have to stop and remember my team, so to speak. So that's great that you have these overlays, so you can see the different colors, the different personalities, and be able to not just get the right people in the right seats, but then get them operating at their best. That's fantastic.
Yes.
And uh, so your coach is also the team coach.
Yeah, she does both. So, and it makes sense, right? Because she coaches one on one a lot with
Hmm.
my team in general. Anytime they want to coach with her, they do. Um, and I coach with her so much. So she really knows and understands who we are. And the thing about the Clifton Strengths and just coaching around mindset is the more time you spend in it, the more amplified your results are. So the more you learn about Clifton Strengths, the more you will see the results of your Clifton Strengths because you understand it differently.
Okay, here's from devil's advocate type of situation. From that perspective, I have heard skeptics say that personality tests are flawed because different mood, different answers. People change uh, from 1 minute to the next. So how can we base so much weight in the Clifton test or any
Clifton
other?
Strengths. I'm so glad you asked this because I am a huge skeptic about these things too. I'm the person that's like, this seems like you made it up. And so I actually did research behind this to find out if there is validity behind it. And what I found is, and I can only speak to the Clifton Strengths test, like Myers Briggs and DISC and all these other ones, they do not have the scientific research behind it to be able to make the same claims that the Clifton Strengths Assessment can. So I'm only speaking about Clifton Strengths Assessment. But when we're looking at Clifton Strengths Assessment, there's two big data points that I think are really important. Number one is Gallup has tested this to see if it changes over periods of time or day to day, et cetera. So they've spent the millions of dollars to research this already. What they've found is that you might see slight movement. Like your number two theme might now show up as your number five, but your top 10, top 12 really stay the same. Just the order might change a little bit, but they generally are going to be the same. You may have like a number two move to 13. That would be kind of a big difference, but not enough to be significant. You are almost never going to see, for the most part, your one go to your 34. It's just very unlikely, unless there's like a major trauma or something like that. That's where they recommend retaking it. But all other things being equal, they see no virtual difference in the outcome. So that's number one. But then a lot of it's in the interpretation of it, right? It's not just that I have the strengths and I know that competition is my number one, communication is my number two. It's when I work with Rosie, I asked her this because I was skeptical. I said, how do I know you're not just like making up something that sounds good and this is actually what it should be? And so I asked her a series of questions beyond that. And here's what I found out. If you are speaking to five different certified Clifton Strengths coaches, okay, you speak to five of them, and you don't know any of them, they have no prior knowledge, no additional data points. You walk into a room, there are five of them there, and I say, hey, I'm running into this issue with my employee. Here is my report, and here's her report. Here's what it looks like. She's a project manager, and I give them the exact same details, and they all hear the same details. They're all going to ask me follow-up questions because they'll need to ask some questions to get to a conclusion. But if they all hear and receive the exact same data points, there's about a 90% overlap in what they are going to tell me. So that means like 10% of it is like variable and probably influenced by the person that is coaching you and their life experience and their own results. But all other things being equal, you're going to get the same outcome almost every single time. And so for me, that's a really good predictor of the accuracy of it. It would be different if I talked to five different coaches and they all came up with different responses. That would mean that, okay, you're just making it up and it's just your interpretation, kind of like a therapist, right? Like they're interpreting it through their experience, their expertise, their lens of what you're telling them. But if you talk to five therapists at the same time, they're not all going to necessarily give you the same response or feedback. They might all come to the same diagnosis, but they might not give you the same feedback or response. And so that to me was the thing that I was like, oh, okay, this is actually legitimate and rooted in actual science and not just somebody's like whim. Like one of the tests, I think Myers Briggs or one of them was developed by some random lady at her kitchen table. It's not done in a scientific way the way the Clifton Franks is done.
I've heard about the history behind the actual, background behind the Myers-Briggs, and it's voodoo. Uh, yeah, that one and anything based off Myers-Briggs, it sounds like hogwash. But
Yeah.
uh, but oh, I on the flip side, speaking of competitive streak, anytime anytime I take one of these tests, I'm thinking in the back of my mind, how do I win? Right?
Oh, you must be in competition.
How do I beat this test? How do I make myself look the best?
Really good. Oh, yeah, you might be high significance too.
What's that?
You might be high significance too.
Well, I wanna win. I wanna maximize my efforts,
Mm.
right? So when I take this thing, I want the best score, not just my score.
Okay, when you take it, you'll have to tell me your results because I think we're very similar. I'm number 1 competition, I'm number 5 significance, I'm high maximizer, and it sounds like you maybe share those qualities.
When if my picture of a good test score, an accurate test score is when somebody else looks at the test, after the fact, goes, "Wow, yeah."
Yeah, okay. Yeah, you're probably high significance too.
So, yeah, unfortunately, I also fear that the test might be flawed, or my
You have a little
results.
suspicion.
So, what's next for you? Actually, I want to ask you though, is going back to the assets. Why did you said you have a particular fondness for commercial residential apartment buildings, but uh, why not other commercial assets? If you could scale.
Yeah, this is a question that we get asked often, and I think about it often. And, I told you at the beginning of this, I have a lot of different asset classes in my own portfolio. We decided that we want to go an inch wide and a mile deep, not a mile wide and an inch deep. And so I wanted to be a master of one thing, and that is multifamily. You would be very hard pressed to put me into a room that I don't have significantly more knowledge than most of the people in that room about multifamily because that is my craft. That is the thing I'm an expert in. And when someone thinks multifamily, they think Veena Jetti. And when someone thinks of Veena Jetti, they think of multifamily. And so they're kind of synonymous. And I like to keep it that way because I can be an absolute master of one craft and I can just knock that out of the park. If you look to the most successful people in the world, most of them started and got really the bulk of their success by being really good at one niche thing that they do. And so the philosophy that I have is invest in multifamily. If at some point we decide to branch out into something else, we can and we will. And I will do it with the right partners who their craft and their one thing that they've always done is whatever asset class, right? Like if we decide to go into like build to rent communities, that's really high on my list of things that I would like to expand into. If we go into BTR, we are going to be doing it with consultants, advisors, partners, brokers, investors that really know everything about BTR. That's going to be the thing that we do. If we decide to go to self storage, same thing true. I'm going to go find the best self storage operator and I'm going to partner up with them because I want someone who's a master of their craft. There are so many things to know that when I see somebody as an LP, when I see somebody who's in self storage and assisted living and multifamily and mobile home parks and restaurant and retail and office and hotel, I'm like, okay, who's running all of these? And they're like, oh, it's just us. It's our team of 3 people. I'm like, no, you cannot possibly know everything that you need to know to operate at a base level, let alone be great.
Well, self storage is just like apartment buildings without all the people.
I like self-storage. I have it in my portfolio. I just don't want to put my investors' money at risk on something that I don't operate day in and day out and know backward, forward, and in my sleep.
Well, what I was getting at though is is there are there certain conditions in which you might consider, going outside your that scope? Because, being we mentioned earlier, we talked about the market and the flooding of this one particular um, industry, this sector. Uh, and then what happens if the laws change residential? There's a lot of regulation around residences, landlord laws, that kind of stuff, tenant laws. Is there like do you have a set of standards that says if this changes, we're going to have to find something else, or we're just going to get better at it?
Yeah, we do have investment standards that we hold very, very central to what we do. So, yes. However, I would say that anybody that's looking for something that doesn't have risk should really not be investing. Go get a government bond or something, right? Because there's going to be risk in any kind of investment, especially if you're looking for something that's going to beat the S&P 500. You're going to have risk. So when an investor asks me, if it's risk free, I say absolutely not. There's risk in this. If you are looking for something risk free, this is not it. In self storage or in RV parks, you're going to run into similar laws or issues with government issues that you can't control. You don't know. And anytime there's an administration change, we never know what that's going to mean for the real estate as a whole, not just multifamily. So, yes, these are risks. We do our best to mitigate them and know about them upfront going in. A lot of times, our assets, because they're already existing and in operation, a lot of times they're grandfathered into whatever rules that come about in the future. For example, the deal we bought last year, we bought it, and I guess it was like 2 weeks before we closed. Phoenix, the market that it's in, the submarket that it's in, revoked all the new build permits because they have a water shortage. And so they said, we can't give you a new build because you won't be able to get enough water there. And of course, we already had water. This is an asset that's 30 years old. So we already have water, and that water is obviously can't be turned off. There are residents there. So for us, like those types of changes, usually we get grandfathered in, or if they happen, we will handle them as they come. We do build in for contingencies and redundancies across our assets, but um, you never know what's going to happen in any asset class. And so you have to always be prepared for the unexpected.
So your fund invests in Texas, Florida, Carolinas, Georgia. I think like the outlier is DC, but you're
We
mostly
don't invest in DC.
uh, what's that?
We don't invest in DC. I have properties in DC in my personal portfolio, but we don't invest through our funds. We don't put investors into DC.
Thank you for correcting with that. But you're in the southeast. Is that by design? And uh, what drove you to that corner of the United States?
Yeah, we're in the Sun Belt states and Arizona. So Texas, Florida, Georgia, North Carolina, South Carolina, and Arizona. And we have sleeper markets that we are studying. So we study our markets for about 12 to 18 months before we ever enter them. Because like I said, I want to know everything about our markets. I want to be the master of that market. And so there are other markets that I am very interested in that we're watching right now that may come off our watch list into our target list, but for right now, they're not. And the reason we chose those states is they're very landlord friendly states. Several of them don't have a lot of issues with income tax. Like Texas doesn't have any state income tax. And so we like assets in those states for that reason. Third, there's no rent control. So we don't invest in New York because there's rent control there, and that just really doesn't work for our model. And fourth, and maybe the most important, is job growth, population growth. There's a diversity of sectors. For example, we don't really invest in Houston. And the reason being is it's just a little too medical and oil and gas heavy for our taste. We like markets like Dallas, where there's significant diversity of sectors here, significant representation from Fortune 500s. And that means that there's a lot of job stability, there's population growth. Dallas is the hottest market in the entire country. So just having a market that we invest into is not enough. It has to meet certain criteria and standards for us to be able to actually move forward in those markets.
Speaking of that migration, did you hear about Musk's? Uh,
I did. California to Texas.
yeah, he's moving more of his headquarters there, so that's good news. I, I imagine.
Yeah, it's going to be great for Texas.
Yeah. Well, what is on the horizon for you? Are you make just more of the same? Are you growing? Are you looking at other markets right now? Have you have exciting plans on in the future?
I would say that nothing about what we do is exciting. We try to find really boring and vanilla investments. Exciting means that there's a lot of risk or chaos that could ensue. And so I always tell our investors we really try to look for deals that are about as exciting as watching paint dry. So no, nothing exciting on the horizon. I think the thing that I'm the most excited about is I have been leaning into the Multify community. It's a community of like minded investors where I do a lot of teaching and I help people start their investment business or scale their investment business. I make myself really accessible for questions, comments, concerns. I do a lot of education. I do like weekly coaching calls in there, and I have a master class that we are doing. So I'm very excited about that. That is the thing that I'm the most excited about because I've had so many people walk out of my masterclass and go, this changed my whole entire life. This transformed my life, and everything about how I operate and function will be different. Thank you for doing that. And so I'm like, okay, this is worth it. So I'm not chasing the numbers or the money at this point. What I'm really chasing is the impact. I'm chasing the success. My drive for competition to help others win now has become a really big focal point. And so that's the thing I'm most excited about.
I almost had to let out a little chortle when you were talking about entering a new market and had to be the master of it. Like, there's that
Yeah.
competitive thing again.
Yeah, there it
Uh,
is.
uh, but talking about your investors and that mindset, right? And when you were discussing, you're talking about becoming, getting that coaching, that personal development to be the Veena that goes from 1 billion to 10 billion. Uh, and is there something is there a way you help your investors because change their own frame of mind, right? What I'm getting at is I know a lot of first time investors never even consider apartment buildings. Sometimes they don't know that they can be private passive money lenders or invest in like apartment buildings. I can't buy one of those. So how do you talk to somebody with that frame of mind?
Yeah, look, I don't ever like to convince someone to invest because when I'm convincing them to invest, they're not really excited about it. They're not really interested in it. I don't like the pressure that comes with that. So really the way I look at my job is I have a responsibility to you to share with you what we're doing and present opportunities and create opportunities. And if you want to take them, great. And if you don't, that's fine too. Um, there's a saying I like, which is not quite applicable here, but it's some variation on it is like, the world needs garbage men, right? It's not a glamorous job. It's not a sexy job, but we really need it. And, very thankful for them, especially during COVID, right? When the rest of the world shut down, they were still operating. And so I think of it like that. Everybody is useful. It might not be something that's glamorous. It might not be something that you want to be doing, right? But there's a place for everybody. And if every single person wanted to invest in multifamily, it wouldn't make it as lucrative of an investment. It's an investment that does really well because not everybody does it. If everyone did it, then it would just be another thing. It wouldn't be very exciting or profitable. So, where we find opportunity is where other people are scared to make decisions. And most Americans are really bad at assessing risk, and most Americans are really bad at making financial decisions. That's why we see more Americans than not that are one flat tire away from complete financial disaster and ruin. So, most people are very bad at making financial decisions. We look for the investors that are really good at making financial decisions and assessing risk. And those are our people, and those are the investors we speak to. So we don't try to speak to everyone. We're only speaking to investors that really are more sophisticated and more knowledgeable. That's our general target for investors.
That's a good philosophy to stick to. The only thing I would say about that is that sometimes even s- savvy investors may not realize all the options that are out there, and
Absolutely.
I wouldn't want to convince anybody, cajole, anything like that, but sometimes they just haven't discovered yet.
Sure. It's our job to educate them, to it's our responsibility to share it with them, but it's not our job to give them investment advice. It's not our job to convince them, to push them, to pressure them. That's just not my style.
Absolutely right. Well, I tell you what, I've really enjoyed our conversation today. I want to go into one of the final, segments here is the countdown to impact. And there's three sections or three topics that um, have it made an impact on you. The first one, three uh, three books that have made an impact on you. Two quotes and one person.
Only one person. That's harder.
Mm.
Okay, three books, right? So first book is Mindset by Carol Dweck. Amazing, incredible book. Second book I'm rereading for like the third time is called Outliers by Malcolm Gladwell. Very good book. I actually really love all of his books. I think he's a really great author. Um, I have a three and a four, which are two books by two different friends of mine. Uh, and what's really cool about them is obviously we're friends. They're very close friends of mine. And I get to see and hear this whole perspective about them that I might not have otherwise known. And they both recorded their own audiobooks. So when I'm listening to it, like sometimes if I have like a bad day or I'm going through something hard and I'm like, oh, I don't want to bother people that are really busy and super successful. So I'll just go listen to their audiobook and it feels like my friend talking to me. Um, so that's Adversity for Sale by Jay Jeezy Jenkins. And it's really good because he is a very smart businessman, but this book talks about like his upbringing and how hard he had it and what he had to do living in like the projects essentially to get to where he is today. So that's one. And the other is Be Seen by Jen Gottlieb. Great read for anybody who is feeling like vulnerable or scared to put themselves out there and to be seen. And I mean, it's just changed my whole perspective on how I think about my own brand. And it's the reason why I've had the courage to go on these really big stages and speak in front of like 10,000 people at a time, is because I'm finally getting comfortable with being seen. So, okay, I gave you four, not three, but then my competition had to win, I guess. Okay, so two is what? Quotes? Two quotes? Okay. So the first one is, the best time to plant a tree was 20 years ago. Second best time is today. And what that means is it was best to invest in multifamily or single family or self storage or whatever it is you were going to invest in. It was the best time to do that was 20 years ago. You would have been great now. It's really easy to see that in hindsight, but you have today. So don't wait until 20 years from now where you look back to today and go, oh, I heard Veena say that and I wish I would have done something, but I didn't. Right. So it's like that regret. Um, and I have so many quotes that I read often, especially when my mind is getting weird. So I think the second one I will tell you is, I'm trying to decide which one. I think it's maybe around abundance mindset. And it is a candle doesn't lose its light by lighting another candle. The flame gets doubled, not diminished. And I think that's really important because I used to live in my own mind and in my world where I would think, if I give you some of my light, it's going to diminish my light. It's not true. It just makes the world brighter. It makes everything brighter to share my flame with you. And so that's living in true abundance where I don't feel like I have to gatekeep anything. I don't feel like I have to keep you from being successful because there's only room for me at the top. We can all be there. I don't see why we can't have a big party at the top together. And so I've learned that competition happens at the lowest vibrations and collaboration is what happens at the highest. So I try to live by that. So those are my two quotes. And then, okay, person. Ugh, this is the hardest one because I could name you 25 people off the top of my head that have completely changed my life.
I know. Might have to
Um,
switch these around.
I know you do because people, it's so much easier to name three people, but even that wouldn't be enough. We could be here for days and I could be
Then it
telling you
wouldn't be a
all the people.
countdown. It'd be like 3, 2, 3.
Yeah, it really wouldn't. I see
3,
the
2,
challenge here.
25.
Yeah, exactly. There we go. That you can make it a thing. I could see this being a thing in the future. Um, so I think person, it would be my kids. So they're two different people, but they are twins. So I had them both at the same time, if that can
You've
count.
got twins too, huh?
I do. Do you have twins?
5 years old, identical twin
Mine
boys.
too. Mine are not identical. Mine are fraternal girls, but they're 5. They just turned 5 last week. That's so amazing. Okay, well, it's the hardest thing I've ever done, but it's the best thing I've ever done. And they've just given me a whole new perspective on life and on how I look at the world. My whole purpose has completely changed and become clearer. And all I want is for them to be happy and healthy and know without a shadow of a doubt that their mom and their dad, but I can control me, right? So their mom loved them so much and that they're enough just the way they are and that they're going to do great things. Like those are my dreams for them. And so being a mom has been the single event that has completely changed my world for the better.
That's so great. Yeah. My boys are, I've got, are they your first?
My first and only.
Oh wow. Yeah. I've got a 13-year-old boy and the 5-year-old twins, all boys. And they're all my little buddies.
I
And
love that.
every day, they're the reminder of why I want to be and do my very best.
I love that. My dad's an identical twin too, so there's a lot of twins in my family.
Not in mine. I don't know where it came from, but uh, I think it's great. Even, you were talking about the candle, lighting another candle in abundance, and it reminded me of. Uh, so I don't even know where I came from, but somebody said that you know that he doesn't look at life like you have to fill up your cup first to pour into others. Instead, he looks at it like cut the bottom off the cup and let abundance flow right through you
I
to
love that.
others.
I love
So that was a great reminder, and I love the image of the candle lighting other flames. You're not giving up really anything of your own. You're just sharing, and you know it's the the whole is greater than the sum of its parts.
exactly.
That's so great. Well, Vina, I again really enjoyed this conversation. I wish we could talk longer, but I respect your time. And uh, if anyone wants to learn more about you, learn more about the shoot, I did it again.
No, that's
V
okay.
funds. I was just, I apologize. It's everything is read to me with this voice of Siri. Um,
No worries.
V funds and
5 funds,
maybe
yes.
maybe reach out. Where should they go?
Yeah, so I am on all social media platforms as Veena Jetti, VeenaJetti. So you can go find me social media everywhere. I do respond to my own Instagram messages. So if you're trying to reach out to me personally, find me on Instagram, follow me, send me a message there. And then if you want to learn about our investment opportunities, what we're doing at Vive Funds, You can go to vivefunds.com, VIVEFUNDS.com, and we have an investor portal. You can log in there. Our investments are open to accredited investors in the US.
Love it. Thank you. We'll put that in the show notes. Well, Veena, thank you so much and have a great day.
Thank you. You too.